A unique alliance of over 50 fintech investors and digital finance innovators have launched new investor guidelines aimed at spreading the benefits of the fintech revolution more widely on June 20. Innovations in digital technology have created new opportunities to reach unbanked and underbanked low-income customers in emerging markets as well as developed countries.
There is a huge shift going on in the emerging markets, maybe more so even than in the so-called developed world in terms of digital access to just about everything.
We are trying to include the next billion into the formal financial services, which will make the world a better place because customers will trade up from cycles to motorcycles, railway to planes, etc. So we are trying to uplift the poverty levels and make India a better place.
The starting point is to already realize how many lives are being changed domestically by the success of MTN Mobile Money in Ghana, EcoCash in Zimbabwe, M-Pesa in Kenya, of course, but also in Tanzania, Mozambique. So we're already seeing a real life-changing situations because you can move money a little bit easier. Our mission is to make sure that these payment networks connect to each other so that people can also connect to each other and transact between each other across border.
While the opportunities have increased, so too have the risks surrounding digital financial services for investors, investees, and customers. An example is the rapid growth of digital lending products, some of which carry risks of overpricing and overlending to customers.
People somehow expect something more from the impact investment community than they do from the greater financial community. And I think that is foolhardy because I believe people are people and we still have the same culture that you have in the greater financial community.
There is a role for a responsible investment community in this development of the digital ecosystem, and to the extent that we can hardwire responsible investment principles into their activities and those of their investees, I think we will avoid a lot of trouble down the road.
One factor that is holding back investors is the lack of a framework to help them evaluate these risks. The guidelines will enable investors to recognize the opportunities and points to consider and mitigate risks.
The regulator has to make sure that markets work efficiently and work for everyone and create equal opportunities. And still we see, if we look at financial inclusion, that not everybody has equal access, and that new products in the market based on data use and all kinds of fintech solutions, they create a lot of opportunities for people to get services, but they also carry risks of misuse of data or exclusion of people.
To be around again in 5 years, I think we need to look at two things. We need to understand better the young consumers now that are going to be our main users in the future, and we need to engage and lead the conversation around some really hard regulatory subjects around cross-border transfers and data protection and the implication of thereof. I think those two things are going to be critical.
Any investment organization can subscribe to the guidelines and join the community of investors. The guidelines are not new rules or regulations, not a law, not red tape. They are a voluntary framework that organizations can sign up to and use as guidance when they invest in responsible digital financial services.
I think in order to be successful and in order to get customers to trust you, you have to be passionate about your customers, and therefore you have to, the objective is to get them to love you rather than like you.
The guidelines were launched on June 20 in Amsterdam, the Netherlands, at the Connecting the Dots conference organized by Goodwell Investments.